All right, guys. We are here today. It is Monday morning. Nvidia backed down a little bit. Friday, it went all the way up to like almost 120s, down to 117s this morning. You can see it falling down here. How you guys doing this morning? This week's a massive week. Honestly, we got a lot of stuff. Right, today's Wednesday. We got the Fomc decision. The first rate cut in a while is happening Wednesday without question. So, yeah. Are you really trying to drink that tea, Radical? Like, that means you gotta have some type of, like, I'd be careful with, I don't know about kava, but I know, I've heard of the second one. And, that usually is like I just don't, gross. Hanger to short, but sadly market's not high enough for me. Cheers, what's up? Phil, Joshua, Joseph, Radical, Steve, Pawn, Lair, Roz, Daniel. Yeah, today we got the Empire State Manufacturing Index. I don't know what it's going to do, but we do have that today. Tomorrow we have retail sales. Wednesday we have FOMC, of course, major report, huge report. Yeah, I would just be careful. You can get physically addicted to that stuff, Radical. I've known a couple people in my life that have, and it's a rough thing, bro. I'd be very careful. It might make you feel good, but you might get physically addicted to it. I'd be very careful with it. It's not like, one thing you learn as you get older is like anything that makes you feel really good, there's going to be a consequence to it, right? Like you're going to have to pay for that. Like, like your brain has to balance itself out. It's not able to just feel good all the time, right? And so if you take something that gives you these really big highs, it's going to need to balance it out. And so you're going to have to feel lows afterwards. And so that's what you learn. Like, I'm not saying I was always perfect, but one thing you learn is that nothing is without cost, right? And so you learn more to just be, like, I've learned as I got older to just be sober. I don't need big highs and lows. I would rather just be stable. Stability is more valuable than anything to me. Yeah, FOMC meeting, the first rate cut in years. Okay, yeah. I mean, if it's for chronic pain, do your thing, Radical. All good. I understand. Sorry. I didn't mean to lecture. I really didn't mean to lecture. All good. I understand. Yeah, 100%. I agree. It's probably better than that option anyway. So, yeah, you're fine. That's fine. I get it. Anyways, so today, how much does the Fed cut rates is what we're going to ask for a poll today. How much does the Fed cut rates on Wednesday? We're going to do no rates. 25 basis points. We're going to do 50 basis points. And then we're going to do something else. Comment. All right, guys. How much does the Fed cut rates Wednesday? Vote on that poll. Let me know how you feel. Yeah, like I said, though, one thing you just learn in life, like one thing I've learned in life, and then, when you're young and you want to feel good and you want to, do all this stuff. Again, what I learned is that there's always a consequence to it, right? Like your brain has to be balanced. And so if you take something that makes you feel really, really good, the next day your brain has to balance it. And so the next day you're going to feel really, really bad. And like that's not fun at all. And I would rather, I never really got super into anything, to be honest, but that's life. You got to just, even coffee, right? Even when I drink coffee, I try not to, like, I know some people that drink like 5 cups a day, I just drink like one cup. Yeah, I mean, we're not going to do zero. Like, zero rate cuts is unfathomable. Yeah, it did pivot. So now everybody is expecting. Is that 75 basis point cut? So we're at 525 to 550 now. 25 basis points are here. And so, yeah, they're expecting 61% of people are expecting a 50 basis point cut, which is a drastic mistake. It's a mistake. I don't think we should cut rates by 50 basis points. I think we should keep it 25 max. Yeah. And regardless of what we do, one of the interesting things about this is that it's a really important one. This is important because this is one of the Fed decisions where nobody knows what he's going to do, right? Like we're pretty balanced here. It's 60-40, you know, for a little while it's 45-65. So this is pretty balanced here. You know what I mean? So like, well, I guess the point is like the more balanced, the more variance heavy the FOMC decision is, the more volatility we might potentially get, meaning nobody knows what we're going to do, and that might cause kind of brash reactions when the Fed does decide to, you know, whatever they decide to do. So I think 50 is, I disagree with 50. I don't want it to be 50, but it's possible, and at this point it's actually more probable that it's going to be 50. And again, I think it's a bad idea personally, but hey, all good. Yeah, I hope they do it slow and steady, but it doesn't look like they're going to do it. It looks like they're just going to rip the Band-Aid off and do 50, which, again, to be honest, for me personally, I think it's a horrible idea, a terrible mistake. And it's actually more probable that we're going to do 50 than 25. You know, the problem with 50 is that it might stroke a fear in markets, you know. And again, like, regardless, it's an election year, so you got a lot of people acting like the economy is about to fail, which it's not. It's very clearly not. With the correction that they did, you know, unemployment's still pretty low, you know what I mean? Interest rates are not even objectively, like, super high relative to historical standards, you know. So I don't know. But you guys know me. I'm pretty much against rate cuts in general right now. I think we should combat inflation first. So. Yeah, so we put an offer in at a rental property, and we basically agreed on a price. So we offered, this is how the deal went, just to, you know, again, I'm not claiming to be a real estate agent. I'm not claiming anything like that, you know. But basically, it was listed for $270. We put an offer in for $240. You know, which is pretty big percentage under list price, right? But this is the point, is that we can kind of bottom feed here, is what I describe it. I'm a bottom feeder when it comes to this stuff. Like, I'm trying to get the lowest price I can, because I do think the real estate market might correct. And if it does, I don't want to pay way more than it's going to be, right? And so my logic is, before we start cutting rates, buy a property, you know. So yeah, we are, you know, 240 to 270. Like, the difference is a 13% difference. We're over 10% difference in price, right? And they countered at 255, and then we countered at 245, and we're basically like, look, this is the highest we're going. We're not going over this, really. Not really. And so then they said the lowest we could do is 247. And so we said, okay, deal at 247. You know, so we got a 10% discount on the price, which is good. You know, which is good. That's what I wanted, at least 10%, because that way, if the real estate market corrects, we're still good. Long term, I like the area. It'll be good. Yeah, we're cutting. Yeah, we're cutting. It's inevitable. We're not gonna pause again. I promise you guys. I mean, I don't freaking know. I don't want to get myself in trouble. One day I'm gonna be wrong about things. I'm like, hey, I promise you guys, and then everybody's gonna be like, aha. And so I'd rather just not. I'd rather protect myself regardless of how probable I think it is. I think it's 99, 100%. I think it's at least 99% likely that we're gonna cut. There's not even an option for it on the CME watch tool, right? There's not even options for it. Yeah, it's an investment residential property is what it is. Um, Yeah, but we're going to cut rates, right? It's not even an option. 61.39, 61% chance of a 50 basis point cut. To put this into perspective, for anybody that might not understand what all of this means, basis point just means half, like a decimal of a percentage, okay? Is what the context that they're using basis points in when they talk about rates. And so when we say 50 basis points, what do we mean by this? We mean 0.5%. Right, they're going to cut rates 0.5% is what this is. It's really 0.5. So if it's 0.75, this is 0.75%. It would be 75 basis points. You know, if it's 25, it'd be 0.25%. It'd be 25 basis points. You know, that's what they mean by when they say basis points, and that's they're talking about federal funds rate. So they're talking about the Fed funds rate. So they're talking about short-term interest rates, right? This is the amount that banks charge each other to hold money overnight. And these are short-term rates, but like eventually these short-term rates, there is a lag, right? There is a lag, but eventually these will trickle into long-term. And so eventually these are going to trickle into here, but there's a lag, and I would say the lag is about 1 to 2 years. You know, there's a 1 to 2 year lag for how long short-term rates take to trickle into long-term rates. But, you know, the Federal Reserve is doing this to try to help the economy. If the economy looks weak, the Fed can have two different stances, or really three different stances. The Fed can be balanced, somewhere between hawkish and dovish. I would say we're pretty close to balance right now in the Fed, even though we're going to cut rates, and at least in terms of their tone. The Fed can be balanced, which means that, like, they're balanced, they're neutral. They can be hawkish, which means they want a restrictive monetary policy. What we mean by restrictive monetary policy is that the Federal Reserve wants to push interest rates higher, right? Restrict the economy, because that's literally what it's doing. When they bring interest rates as high as they can, they're restricting the economy. Why would they ever want to restrict the economy if inflation's a problem? You know, if inflation has gone up too much like we did in 2022, you know, the Fed steps in, they restrict the economy through high interest rates, they raise the interest rates. They do it through a lot of different ways, but one of them is just straight up raising, like rate hikes, raising the federal funds rate. They could do what's called quantitative tightening as well, which is basically restricting liquidity from markets in those areas, and that causes banks to put interest rates higher. There's a lot of ways they can do it, but yeah, that's a hawkish Fed, one that's trying to restrict the economy to push inflation down a little bit. That's what we saw post 2022. That's kind of what we're getting out of now through the next rate decision. And then there's what's called a dovish stance, which is a less restrictive monetary policy, where they're trying to prop the economy up through low rate environments, right? They're trying to bring interest rates down, and they can do this by buying up a bunch of bonds, printing money, and buying up a bunch of bonds with it. And then, you know, that injects liquidity into those markets, to allow banks to lower interest rates, and ultimately props up those markets. So where interest rates are low, people spend more, they have cheaper access to leverage and money and lending, and so the economy thrives. But the consequence of a thriving economy is inflation. So that's how I go over this at least once a day. It's important for people to understand all this jargon and what it means, and the Fed and rate decisions and all that stuff. So anyways, you know, the Fed will do what's called a dovish stance, where they're trying to bring interest rates down in times of economic weakness, or when they're at least trying to save us, when they're trying to avoid economic weakness. We did it after 2020 in the pandemic. We did QE, quantitative easing, printed money, injected liquidity, you know, brought interest rates down to almost zero. And the consequence, the big reason was the QE. The big reason for the inflation spikes that we got post 2020 was really two major things, right? Rate decisions influence it, sure. And that's why I'm against rate cuts in general, but nobody's going to listen to me. But the real reason prices went up so dramatically post 2020, we had, number one, supply chain problems, right? When it's difficult to ship things, businesses make it up in price, right? They raise prices to compensate for the added expenses and fees that they're having to tack on because it's expensive to get things done in a pandemic, is essentially what happened. Number two is that they printed money. They did QE. They created bank reserves, bought up a bunch of financial assets with it, injected liquidity in those markets, and this can cause inflation spikes as well. And then the third thing is, they did QE. And the third thing is by just straight up lowering interest rates. Or the third thing I was going to use actually is stimulus checks, right? Stimulus checks. They sent out stimulus checks. People spent that money. When businesses found out that people were getting stimulus checks, they automatically raised prices. And so all of these things contributed to higher inflation. It's not just a low interest rate environment. It's the things that caused the low interest rate environment, as well as the things that some people did during the pandemic. And so anyways, the point is prices have gone up a lot in 5 years. We don't want them to go up more. We don't want them to go up more. That's a problem. People are unhappy. That's the real, people like to bring up, the economy and all these things in terms of why they're unhappy. The real reason most people are unhappy, including the people that are doomsday predictors here, telling everybody the market's going to fail, getting really wrapped up in political decisions. The real reason most of them are unhappy is inflation, right? Over everything else. They'll bring up mortgages, like the mortgage market is really the reason they're unhappy. None of that's true most of the time. Everybody's case by case, right? But the real reason is inflation. Prices have gone up obscene amounts. Yes, I did use obscene. Prices have gone up crazy amounts in 5 years. And people are still dealing with it. They're still learning how to deal with those price increases, right? It's changed their whole lives, right? Everybody's lives are much different now than they were 5 years ago, and that's probably because prices. And this is just a generalization, of course. This isn't everybody. Everybody, again, case by case difference, All right, so far, 56% of people think we're going to do 25 cut. Interesting. Yeah, so Apple is going down as an analyst says the iPhone 16 pre-order estimates are lower than expected. Pre-orders for Apple's latest phone started last Friday. Early numbers on that latest phone pre-order data shows that it's not necessarily a positive outlook for pre-orders. The iPhone 16 pre-orders were 37 million units, which is down almost 13% from the iPhone 15 first week pre-orders. Year-over-year drop is mostly lower than expected for the Pro Series as well. So basically, people are looking at Apple with skeptical eyes now, and it is falling. Afterwards, here's Apple pre-orders down, dipping a little bit this morning. You can see Apple dropping. This is probably dragging tech as a whole down as well. But yeah, there's Apple falling down a little bit, looking a little weaker now. My happiness is not money, it's women. Well, that's life, bro. Join the club, brother. No. Honestly, it's bad. A lot of the problem depends on where people live, right? Like, here's a problem, right? Like, I've known a lot of people that live in the South, right? Like, I know a lot of people that live here, right? And there's a luxury tax to live in big cities like California, Colorado, New York. Like, there's a luxury tax to live there, regardless of whether it's luxurious or not, right? And so I know a lot of people that have had these dreams of living in these super expensive cities. And they have literally packed up everything and moved to Cali or moved to Colorado or moved to New York. And when they get there, they make it about 6 months. And then they're like, all right, screw it, I'm coming home. Why? Because they can't afford things there. It's too expensive, right? And so a lot of people are looking at prices and inflation under that lens of trying to live in some of those not really livable cities, and I get it. They want to live there. That might be their home. You do pay a luxury tax to live there, 100%. It's much more expensive to live in California in general, Colorado, and a lot of the people struggling there could pack up and move to a different state and get by much, much, much easier. And I'm not telling you that's what you should do. I'm just saying there's solutions to the price increases, you know. And a lot of people are mad about Los Angeles now because they're saying Los Angeles is like so expensive to live there that like Los Angeles residents can't afford to live in their home city anymore, unfortunately. And so it's getting messy. But yeah. Well, yeah, traders do see 50. So this is what they're talking about, Sam. So again, so yesterday or last week, it was much more probable that we would do 25 basis points. This is 25 basis points right here. This is 50. So this is 25, and then this is 50. So now 25 only has 39%, less than 40%. Now 50 basis points has over 60%. So most people are now expecting a 50 basis point cut. Yeah, I've never really been to Jacksonville. I know Jacksonville's crime. Like, I know they had all those, like, gang wars over in Jacksonville with, like the Y&R crew and, like, all that stuff. That just makes me not want to go anywhere near Jacksonville. And it's ironic because I'm from Baton Rouge, Louisiana, you know. And so my city's not necessarily the safest city either, you know. But I don't know if it's just social media that, you know, or what. But yeah, I've never had the desire to go to Jacksonville. Isn't high property value the goal? 100%, but it's a goal in 20 or 30 years, and you got to make enough to sustain that goal. It's good to buy property and want to live there, right? But a lot of people are not buying property, and I think, yeah, I guess I'll put it like this: I think it's a better move to buy real estate before the property values pop off. Like Austin 30 years ago, 20 years ago, you can get properties for much cheaper than they are today, right? So people that own property in Austin, Texas 20 years ago and held on to those properties are doing very, very, very well right now. Very, very, very well, because those properties have skyrocketed price over a 20-year period. Let me see if I can find a graph for that. And so I think if you're going to buy property, that's the lens you have to look at it under, is you got to find those places in which property value increasing is very, very possible or probable. All right, so here's some numbers, okay? 2019, the average home was $393K, just under $400K in Austin. 2021, the average home price bumped all the way up to $570,000. In May of 2022, the average sold price of a home came in at just under $700,000. In July, the median home price was at $630,000, so it's down, a little bit. Medium listing was, so again, if I'm buying properties, I want to buy a property that I want to buy property in that regard where I have to be strategic with where I buy. And that's what I'm doing with this property that I'm buying as well. I have a theory that where I live currently could turn into like Austin over time. And I might be wrong. Regardless, I think where I am is very stable in regards to real estate prices, right? I think the real estate prices here are very, very stable. Very, very stable. Much more stable than, say, like Louisiana, where I'm from. Hey, John, I understand we haven't changed interest rates in 4 years. We have changed rates in 4 years. We have like, listen, we've only been pausing rates for about a year now. It's been almost exactly a year. I think August of 2023 is when we started pausing rates, and now September of 2024 is when we're going to cut them back down, right? So we've only been pausing rates at these high levels for about a year. It hasn't been 4 years. If you look at the federal funds graph, right, which is the rates that the Federal Reserve is influencing here, here's a 5-year chart. So yeah, we've been influencing rates. So what happened is, again, I always try to show people this. So let me put a better look here. Yeah, so again, 2019, everything's all good. Pandemic happens, Fed dumps interest rates down to almost zero, maintains a low rate environment for 2 years. You know, basically they're trying to save us from the pandemic in this situation right here. This is what they were doing right here. They're trying to save us from a deeper recession, a deeper depression from everything going on in 2020, right? So they're bringing interest rates down. The consequence was inflation. If you look at CPI inflation over the same period of time, right? So we pull up CPI inflation and look at it under the same lens of time frame. So again, what happened during this low interest rate environment? What was the consequence of it? CPI inflation started to turn up to almost 10%. Got really, really high in the same period of time, right? So you can see from 2020 all the way to 2022, inflation spiked dramatically, right? And so the Fed starts to panic and say, oh no, inflation's at 10%. What do we do? What they do is they say, okay, we've paused rates at these low levels for long enough. Now let's raise them back up again and try to combat inflation. And so following that 10% inflation spike, the Fed did a bunch of rate hikes. They raised the federal funds rate all the way up here to 5, where we're currently at now, which is 5.25 to 5.5. And now we've been pausing rates since about August of 2023. We've been maintaining the same rate for about a year now. But we've certainly influenced rates. And then after this, we're going to go down to here, probably. Somewhere around there is where we're going to go back down. And then depending on what they do meeting after meeting, you know, meetings happen every 6 weeks. You know, that's going to influence it. But again, the reason I bought real estate right now, a lot of people saying the real estate market's going to crash. A couple reasons. This is a couple reasons that I'm doing this. And again, I'm going to preface it with I have no idea what's going to happen. I genuinely have no idea what's going to happen. I'm not an investment professional. I'm not liable if you lose money. You always got to make your own assessment, trade responsibly. You know, be safe. Sorry, I'm catching back up on everything. Yeah, so I'm not saying real estate is going to go up. I have no freaking idea. There's a couple things. I'm buying a house, you know, almost 50% lower than it's listed for. That's the first thing. So I'm getting a deal on it. Number two is that the Federal Reserve is going to be cutting rates this year, as well as probably next year, right? The Fed's cutting rates. So what does this mean? This means that there's going to be a lag effect, but even mortgage rates tend to go down in sympathy movement. You know, so as rates go down, eventually mortgage rates are going to start coming down too. And what's going to be the consequence of that? We could get a stronger real estate market, right? Like my theory is, and again, this is just a possibility. I'm not even saying it's a theory because it could happen, but I don't know if it's going to. Is that if we start cutting rates now, by the time next summer hits, right? By the time next summer hits, mortgage rates are going to be lower, which is going to do what to real estate prices? It might make real estate prices go up. It might increase buyers, right? We might have more buyers, more sellers, more people refinancing with lower interest rate environment, and that could cause prices to go up even more. And so I'm trying to get in now before next summer, you know. And again, I'm getting it for cheap regardless. So if this doesn't turn out to happen, then I'm still getting it for well under list price anyway, you know. So like even if we do correct, I'll still be probably pretty flat from where I was anyway. And long-term real estate's one of the most consistent returns, you know. So long-term, regardless of anything, where I bought it, it's not going to go down over time. It's going to appreciate in value over time. And also, over time, I'm going to earn cash flow from it and appreciation. And I think it's less passive than investing in the stock market. But I think it's going to, like, I could do the math and show you guys the math. So I got it for $245 basically. I could probably get $2,400 a month in rent and just basic cash flow a month. And that's going to increase over time as well. But, you know, let's say it increases at let's see, it increases at 4% every year, right? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, this property might be worth a little bit under 400K, as well as, like, you take the 1% rule. I could probably ask about $3,600 a month in rent. And so my rent cash flow is going to increase. Appreciation wise, it's going to increase. And so there's a lot of reasons people target real estate. There's tax benefits in some areas as well. But yeah, my plan is to buy up properties where I live and ultimately just have a portfolio of properties here. And you know, the other good part about real estate is if I ever really need money, I have quick access to leverage. I could always refinance or do whatever I got to do. And so there's a lot of reasons I chose to do it. And again, I could be very wrong. Don't make any decisions based off of what I'm doing here. I don't know. But yeah. Yeah, we're going to do the Empire State Manufacturing data in about 5 minutes. Yeah, we'll cover it. Yeah, so it comes out at 8:30 Eastern Standard Time. Yeah, so I'm getting everything ready. Yeah, so this data drops in about 5 minutes. Alright, so we got this live. Let me exit out of some of this stuff. Yeah, bear with me, guys. Trying to there we go. All right, so we are up here. We got the Empire State Manufacturing Index. It drops at yes, the New York Empire State Manufacturing Index. It's expected at minus 4.1%. Minus 4.1%. I'm gonna put a timer up. So we got the timer up. We got 23 or so minutes left. 23 minutes. Bear with me, pun intended, I guess. John, I'm selling my estate in Sicily, so the downside is listed for $680K, but I'll do you a great price for cash. Yeah, but no offense, dude. Sorry, I bumped my mic. No offense, bro. But that's in Italy, you know? From my understanding, right? Let me see. I'm just trying to confirm. Yeah, I mean, I don't know, brother. No offense to Italy. It's all good. I think it's a beautiful country. I really do. I wouldn't want to be a capitalist in that country, just because it's too centralized. Best way to put it. Point is, I don't know if it's the best country for investments, if that makes sense. It's all good. Beautiful country, though. If I was buying a vineyard, maybe I'd do it in Italy, but not a residential real estate property, you know. I know you're kind of joking, but still. September 0 basis points. Nope, not going to. Again, I don't know. Yeah, so again, a lot of people talking about super micro semiconductors. I don't know. I don't know. So T Semiconductor said they have a chip 20 times faster than NVIDIA. Will U.S. restrictions hurt? I'm not sure. We'll see. I don't know. And again, we got 20 minutes left until the Empire State Manufacturing Index drops for 8:30. So we'll see what that looks like. Again, here's NVIDIA, man. NVIDIA's looking weak this morning. I think there's a big decrease. So it's down. All right, and we're going to be trading on Top Step today, dude. We have made money almost every freaking day, honestly. And I'm pretty pumped about it. I'm pretty excited about it. Like, we have made money almost every single day. We have been grinding it up on Top Step X. Just to show you guys some of my stats here. So again, Top Step X, again, the single biggest edge in trading, in my opinion. So if you're a day trader and you want to be have the biggest edge you could have, like, check it out. Like, look at these little trades I'm making here. Look, $12, $20, $7, $10, 7, 5, 10, 5, 7.50, 8, 9.50, 10.50, 74 cents per trade. So I'm keeping a large majority of my profit, slowly building up profit in these funded account programs. It's honestly the best edge in funding, in my opinion. Top Step gives you a demo. They test your skill with it. If you pass the test with it, they fund you. If you fail, you only lose the monthly subscription. The base one's only $49 a month. If you pass it, you get $50K in funding with a 90% split. So it's similar to putting the money up yourself in terms of split, and you get to keep your first $10K in profit. If you lose, it's only $49, and the ratio is a 2 to 3. You got to make $3K without losing $2K. Very reasonable thing. And the overarching benefit that I'm being loud about is 0 commissions, which is crazy big edge, which means I can trade micro contracts, trade very, very small, build up these small little trades, and then let my account grow. Much more risk averse way to do it, honestly. And again, we made money last week. We made money this week, or hopefully we're going to make money this week. And yeah, they're a sponsor of mine. They pay me money. I'm biased because of it, but I genuinely think it's like a powerful thing. Let me look at the last week here. So the last week we've profited about $270. Not a huge amount. I'm trading slow. I'm trading small. I'm taking it very slow. But again, if you want to check them out, they are an affiliate of mine. They pay me money. I'm biased because of it. Check it out. There's the link. And again, I'm not against, like, I think college should be free, right? Like, I'm not purely capitalistic. I think college should be free. I think there's a lot of ways that we should be able to tax the, top 1%. But, what's your number one vacation destination? I don't know. I like Canada, to be honest. I really do. I like Canada. Yeah, so we made about $250 last week. It was a good week. Here's my graph. Very small week. Again, we're trying to build up cushion on this funded account. So you kind of see my stats here, what we did. There's my graph on Top Step X. Again, you can also see my daily net P&L here. So we're doing pretty good day-wise. Like, here's all last week. Those are my graphs. So we're doing pretty good. I like Ontario. I like Batchewana Bay. I like... Yeah, I'm using Top Step X. So the 0 commission thing is only on Top Step X, Luca. It's only on Top Step X. You can trade futures on Top Step. So you can trade gold. You can trade the S&P 500, basically the SPY price action. You can trade the QQQ price action in the NASDAQ or the micro NASDAQ. No PDT rule. That's the benefit. Most pro day traders trade futures. You know what I mean? And that's what a lot of day traders don't understand. They try to put up money themselves in stocks and lose it. This is just and most day traders are going to lose anywhere they go, including here, it's a lot cheaper to lose here, you know. All right. I'm pretty sure they have a trading view option, but Top Step X is connected to trading view, right? So this is trading view charts, right? So here's Top Step X. This is trading view charts. You can see it. It's just kind of like a souped up version of trading view. And this is the one with no commissions, right? So, all right, guys, look at Apple dumping down again, dragging the market down. Why is Reuters re-reporting that Intel lost a contract to make chips for the PS6? Yeah, I don't know. Maybe they have shorts. So I'm looking at some news showing up here today, guys. So we've got Deutsche Bank says, quote, our analysts, including insights from our AI tool, suggest recent media hints towards a 50 basis point cut are weaker compared to the lead up to June 2022's famous 75 basis point hike. Boeing is going to be paying Embraer $150 million over the 2020 decision to walk away from talks for commercial aviation deal. And Morgan Stanley is lowering its price target for MU to $100 a share and continue to see MU as expensive on through cycle FCF generation and remain well below the consensus CY25 EPS. We also had some ECB, which is the European Central Bank economist speeches. So the ECB chief economist Lane was dubbed, quote, moving from 3.75 to 3.5, explaining the latest rate decision. Looking ahead, a gradual approach to dialing back restrictiveness will be appropriate if the incoming data are in line with the baseline projections. And Goldman Sachs and Citigroup cut China's 2024 growth forecast to 4.7% from 4.9% and 4.8% respectively. So that is the updates in markets today so far. Looking at like gold, Apple's down after disappointing pre-order numbers from the iPhone 16 and 16 Pro. So again, Apple's down some on disappointing pre-order numbers, and that's dragging tech down this morning a little bit as well. But the whole thing with the markets this week, guys, and one of the things that I'm specifically targeting heavy this week is choppiness. I think the market is going to be choppy leading up to the FOMC meeting. The only thing that we might not get choppiness from is retail sales data on Tuesday, tomorrow. Tomorrow we have retail sales data that's relevant to the economy. And so we're going to watch that and see what happens there. All right, so we got a lot of comments to catch up on. Sean says, hey, bud, I just want to say thanks for what you do here daily. I know you won't take credit or claim to be a guru, but listening to the way you handle psychology and markets really helped me a lot. Hey, glad to help, Sean. Appreciate the love, brother. Thank you, man. Just remember, not an expert, as I always say, not a guru. I always try to preface everything with, like, look, I could be wrong about everything and anything I say, including real estate especially, right? Like, I think it's polarized. I think with real estate right now, there's a chance that we just dump down, you know? I think there's a chance that these rate cuts scare the whole freaking market and people panic and we could get a correction. And again, even if we do, so even if I buy this house and then we get a big economic correction that influences real estate, I'm okay with that. You know, I think those markets could correct some and be all right. I think real estate's gone up a lot. I think real estate's gone up dramatically. I think prices are obscene, and they're okay. I'm okay with them coming down a little bit, even if that means my investments like losing a little bit of worth. Like that's okay. I'm okay with that. Listen, gambling has a better chance of making money than trading. I disagree. I think it's probably about. It depends on. So. 1% is not the percentage. It's about 10%. So it's about 10x what you're saying. It's not as bad as 1%. If it was 1%, nobody would do it. About 10% of traders make money. You know, it depends on the time frame of trading too, whether we're talking about. I think day trading, most people lose for sure. About 10% win. If we're talking about like swing trading, I think the odds go up. I think it's easier to swing trade. I think if we're talking about like medium to long term trading, like buying something and holding it for weeks or longer than that, I think the probabilities go up even more. You know, so I think it depends. You know, most day traders definitely lose though. That's not even an arguable statistic. And that's kind of why I try to do what's right. I try to tell people the truth. I try to be honest with people, including honesty about myself. You know, you got some people that obviously have just gotten weird because it's the internet. But I think I'm providing like value. I think people need to hear what I say sometimes. And I think sometimes it hurts to hear. Like if you think you're going to be some get rich guru out here just getting rich, you know, from day trading, you know, a $500 account, you know, it might not be fun to hear John from Beginner Trading come out and be like, hey, that's not happening. You know, that's just nonsense. You basically got sold is what that means. That's not a fun thing to hear, I'm sure. And so that probably creates some haters too. But it's important for people to hear it, you know. It's important for people to hear it because they need to understand, look, most of the stuff sold to you is nonsense, especially in like penny stock day trading, you know. Yeah, I mean, it depends on, like, it's generalized, sure. Like, I think a lot of the time it depends, right? Like, slot machines, super low probability of making money. Poker is about 50-50 depending on the player. Same thing with blackjack is about 50-50. Slight negative edge in blackjack. You got about a 47-53 in blackjack is what it really is, like odds-wise. And there's a lot more games, so it depends on the game, you know. Bear today, I don't know. I think the market will probably be choppy today, leading into the FOMC decision on Wednesday, especially with retail sales tomorrow. I think we're going to get sideways action today, but I might be wrong. Yeah, we're not going to plug other people. I just don't have any way to vet them. So if you plug somebody, I'm deleting it, and please don't, you know. I just don't know them. I don't know if there's a way to vet them or not. Can you give me an example of a swing trade with an example? Okay, yeah, so what was the one I made money on? I think it was Meta. So on Meta, let me see if this was Meta. That's a monthly chart. I want a yearly chart. So yeah, so Meta had bad earnings back here, right? So Meta had bad earnings, and I'm pretty sure this was Meta. I'm pretty sure I took this trade. I'm not 100% though, so take this with a grain of salt, but I'm pretty sure I got into this trade. And maybe the chat can confirm. I can't remember if it was Meta or something else, or like AMD or something. But the point is, Meta had earnings back here and fell big percentages. It dropped from like 520s down to 420s. You know, it basically dropped 25% down to these levels. You know, after this happened, my logic was like, hey, Meta just dropped 25% short term. The probability of a bounce back is super, super high. Very probable. Like it's very probable that it's going to bounce back at least a little bit, you know. And of course, every time you get a big drop like this, the doom and gloomers come out and say, oh, it's going to fail. The market's going to crash. They show up every time any hint of weakness shows up. But what I found is that there's a very big edge for my system. I can't guarantee you're going to make money. I have no freaking idea if it's going to work. Test it yourself. Not an investment professional. Not liable if you lose. But I would wait for these big blue chip companies that are healthy, that make a lot of money, that have high revenue, like Meta. And I'd wait for them to have these massive drops. A lot of the time it's on earnings. So we drop 25%. I buy up this dip down here after it drops somewhere around here. And then I sit on it for a week. Right? I sit on it for a week. Sometimes I sit on it for a day. And I let this gap fill happen. We have this big gap down. I buy it for a week, let it rebound a really large percentage, like 15% in a couple days. And then I sell once it rebounds. You know, that's an example. And I'm pretty sure I took this exact trade. That's a good example of a swing trade where you're holding it overnight. You're holding it for a few days at least. Now, what you define as a swing trade, stretching it out to longer terms, depends on the trader. Some people define swing trades as like a week or less. Other people define swing trades, they kind of mesh them, which is what I do with long-term investments, where I'm calling something that I buy and sit on for 3-4 weeks, a month, a swing trade. You know, some people are going to call that a little mini investment. It's jargon. Who cares which one's right or wrong? It doesn't really matter either way. But yeah. Yeah, I mean, you're not banned for who you mention. I'm sure they're going to be like, oh, he banned me for mentioning names. I banned you because you're saying the same thing over and over again, you know. And so it's just, you know, I don't know if you're just trying to, it seems like you're just trying to poke buttons. And it's all right, dude. Let it out. You know, it's okay, you know. Yeah, anything under 3 months. It depends. Everybody's different. How about the Saints, guys? Listen. How about the freaking New Orleans Saints? Derek Carr. The Saints are doing it this year. I'm just saying. Listen. The Saints are doing it. I like Dak, but the Saints are doing it this year. I'll go to Reef. How about the Saints, guys? LSU, we won. Honestly, it was an unranked team, and it was way too close for an unranked team. But LSU won. Our problem is our running game is just not... Like, our running game needs to heat up at the LSU. The Saints, though, man. The Saints are going to be my silver lining this year in football. Saints are doing great. All right, guys. Hey, we got 6 minutes. 6 minutes. We got the New York Empire State Manufacturing Index coming out. It's expected at -4. All right, guys. Sean Payton looks like he's regretting the move to Denver. Yeah, but I mean, listen. Sean Payton, it was his time. If you're trading leverage ETFs. Sam, did you name your dog after my dog? Why have I never heard that you have a dog that's named the same thing as my dog here? All right. Yeah, Nvidia dumping down a little bit here too. Yeah, like I said, gold, guys. I'm watching gold. This is oil. I don't know why I put up oil instead of gold. We got the Empire State Manufacturing Index in 3.5 minutes. There's gold. Gold is slightly green. It's at 2,600. Hit 2617s. Yeah, so 2617s this morning. Hit lifetime highs this morning for gold. I didn't even realize it. Here's the Q. Still in this range. You alright? Huh? I'm sorry, baby. All right, guys, so don't invest in Apple anymore. I mean, Apple, one of the most healthiest companies in the world. People have unrealistic expectations regarding the stock. I'm hoping we do. I hope it's 25, right? I would say I hope we don't cut rates at all, but we're gonna cut rates, and so I'm just hoping it's 25 basis points, not 50. I think 50 is a mistake. I think 50 is a bad move. So yeah. Looking at our poll numbers here, we got 30 seconds, guys. 30 seconds. Let's see what we get. Here goes the data release. Again, Empire State Manufacturing data drops right now. It's expected at -4. I don't think it's going to move markets, but it might. We'll see. We got gold. We got NVIDIA. We got the Q up. 10 seconds, guys. Also, I'm going to put it in sub-only mode real quick right now. All right, so this timer's a little bit early, too, but here's the report. We're in sub-only mode. Announce yourself, so as you're subscribed. We appreciate it. All right, guys, here we go. -4.1 is what's expected, and it's not out yet. Waiting. They're late. Nothing yet. 11.5, guys. 11.5 is what it showed up as, which is much stronger than expected here. I think it showed up at 11.5. Let me make sure. Yeah, 11.5 positive. Much different than expected, guys. Wow. That's a much different number than expected. So it showed up at 11.5 gains. Positive. It was expected at a -4, and it showed up at a positive 11.5, really. So that's a big difference, man. Wow. So again, I'll put this up on screen. That's a big difference. The market hasn't really moved much from it, but I guess that's a big difference. Much more strength in manufacturing than expected, I guess. Here, the market actually negatively reacted to it. NVIDIA bounced up some of it some of it though. Let's see what Tesla's doing and some of the other ones that are more high in manufacturing. But interesting, big difference. Yeah, that's a big wrong number. Yeah, I hope so, Cat. I have no idea, but we'll see. There's a leak claiming we're gonna get a 50 basis point cut. Yeah, I mean, I think right now it's more probable that we do 50. Great for today. Well, it's good. Strength in manufacturing. That's an argument against cuts. Yeah, I mean, I don't think we should cut anyway. I don't think cutting's what we want to do regardless. I think people are acting like rates are just so high, and they're not, man. Like, people got used to unreasonably low rates, in all honesty. If we look at the average mortgage interest rate, right? Like, mortgages are where people are really getting affected by it. Average 30-year. So, like, let's take a look, right? Like, look at this. This is average 30-year. All right, so if we look at this number here, like, we are now essentially right here. So where we are in terms of mortgages is literally right here. Like, look at the chart. Like, we just got the last 15 years, in the 2010s, rates were just way too low. They were way too low. They were under 5 for 15, 20 years. And that's really why people are just not ready for it, is because for 15, 20 years, we had this super low interest rate environment that, like, mortgage brokers, real estate agents, everybody essentially got used to this super low rate environment, but it's certainly not the average. If you look at the average, the true average would be right around here, like much higher than where we are now. And so people acting like we're at some crazy, dare I say, obscenely high number in terms of mortgage interest rates, they're not accurate. Maybe over the last 15 years, but that's not down to earth. That's not what we should look at anyway. And so, trying to cut them down here to basically 40, 50-year lows again and then acting like the economy is weak from it is just, come on now. The economy's weak because we printed too much money and sent out stimulus checks, and inflation spiked up, and people are unhappy about that inflation and dealing with those inflation problems. That's what it really is. And so, you know, cutting rates, maintaining this freaking 40-year low of interest rates is just going to make things worse, not better, unfortunately. Now, let me be honest. Even if it goes against what you guys know I want, what it will help and where it will benefit the everyday consumer is pricing. So it was specifically mortgage and real estate pricing, right? Like whenever mortgage rates start to go down, rent's going to stabilize a little bit because they're going to have more competition for mortgages. Because right now the logic of landlording comes like this, is that right now landlords can ask whatever they want to ask for monthly rent. Why? Because they know it's hard for people to get a loan right now and nobody wants to refinance. And so they're basically, the renting is most people's only option right now. And so with that, they can ask obscene levels for rent, dare I say obscene, and they're going to get it because people need to rent right now. Nobody really wants to buy with super, with the higher interest rates that we've seen over the last 20 years. Now, when interest rates start to go down and people start to buy more, there's going to be a lot more competitiveness in terms of rents. And so, that might be good for tenants, might be good for renters to a certain extent. It's definitely going to be good for lenders, but whether that is good long-term for us in terms of inflation is a different story. Anyways, after the Empire State data, Nvidia broke lows, Q broke lows, Tesla broke lows. In 1985, I paid 11%. Right, 100%. Yeah. Yep. All right, looking at our votes, still most people think 25 basis points. And again, I think the chat's wrong now. Listen, I don't know if the chat's necessarily wrong. Why? Because right now, what you got to understand about interest rates is this. Okay, if we look at the CME watch tool, what you got to understand is this. Now, the CME watch tool is incredibly accurate, meaning, and look at it pivot even more to 65%, 50 basis point cut. So this is incredibly accurate over the last few years. This thing hasn't been wrong. But the area in which it hasn't been wrong is not days before. More so, if I look at this 30 minutes before the report, it's almost always right. Right? But we got economic reports from now to then. We've got data coming out from now to then. We've got updates coming from now to then. Basically, over the next 2 days before the FOMC decision, this percentage might sway back and forth. It might change. 25 might go up. 50 might go down, vice versa. You don't really know if this changes prior to the rate decision. Like that's the thing you got to understand. This percentage might change, but at this point in time, it's pretty probable we're going to do 50. And I hope we don't, but it's looking like we're going to. Yeah, I don't know, Digital. Again, these CME watch tool numbers have been right every time for over a year. Like, they haven't been wrong in a long time. And so and again, I always say the same thing where, like, a lot of it has to do with people pushing for cuts. Like the last FOMC meeting 6 weeks ago, a ton of people, like a ton of YouTubers, right? And this is how you know whether somebody genuinely knows what they're talking about or not, right? A lot of YouTubers started saying, we're going to cut. They started telling everybody we're going to cut rates 6 weeks ago. And again, old John from Beginner Training was telling you the truth, which is that we were not going to cut. It's very clear we're not going to cut. People acting like we were going to cut 6 weeks ago have no idea how to gauge economics and rate decisions, obviously, because they're obviously wrong. I told you guys this ahead of the report. I told you guys we were going to pause again last meeting, and that's exactly what we did, right? But for whatever reason, you got all these people that are betting on all these things that are such a low probability bet, and they're telling everybody out there in the ether that we're going to do some wildly unexpected thing, and then I'm like, no, we're not, and then when they're wrong, they blame it on all this dumb stuff, right? It mostly has to do with them just not understanding how to watch the economy and economic decisions. And so I think one of the reasons, like, we've grown a lot in terms of economic reports and economic data, and I think one of the reasons we have is because you guys know that I've been right about a lot of this stuff. I mean, I've gotten the last 3 CPI reports correctly, you know, and that's hard to do. A lot of it was luck. I'd love to toot my own horn, and I guess I kind of am. Top 3 greatest in the world right now at predicting CPI, I would say. But stuff like this is not hard to predict. Anybody that understands even a base level of like rate decisions and probabilities is going to understand that 30 minutes before at 1:30 Eastern Standard Time on Wednesday, whatever this shows, whatever the probable thing shows, whatever the higher percentage here is almost certainly going to happen, right? And betting against that, you know, again, last meeting, all these people were betting on rate cuts, and I told you guys it wasn't going to happen. And so, again, I don't know if people want to be contrarians. They're watching The Big Short. They're wanting to be contrarians or what it is. But understand, guys, the overarching point in my ramble here today is that whatever this shows Wednesday at 1:30 is almost certainly going to happen. It's not 100%. It could definitely go the other way, but it's a very low probability thing. You know, so I hope that makes sense. You just said that you hope it's 25 basis points. I do hope it's 25 basis points. I hope I win the lottery every day of the next year straight. Every single day I'm buying a lottery ticket. I hope I win, you know. Does that mean it's going to happen? Of course not. I can hope, you know. I can hope to be a billionaire tomorrow, you know. Doesn't mean I'm going to, right? All right, anyways, NASDAQ's pushing up. We did have economic strength in manufacturing by the New York Empire State Index. And really, I hope we don't cut rates at all if you want to talk about what I genuinely hope. I hope we pause. But that's even lesser of a probability. So. .5 is not really that bad. That's pretty close to average, Melody. I guess the question is, do you guys think rate cuts are a good or bad thing? Is the real question. Like, do you guys think it's a good or necessary thing, or are you guys like me where you think we could just chill with, you know, maintaining and pausing the federal funds rate for a longer period of time? That's what I really hope, but I don't think it's going to happen. What's the trend from the past few years when the Fed cuts rates? Well, what it matters most, anytime you pay attention to the meeting, you've got the actual decision on one side, right? And then you've got the tone of Powell on the other side, right? Now, the logic goes like this. Okay, I'll give you guys like an understanding how to look at this, right? The logic goes like this. If the Federal Reserve does what's expected, so say something's at like 75-25, right? Like 75% chance of 75% chance of votes on the CME Watch tool, and the other one's 25. If we go with the as expected number, i.e., the neutral outcome, like at this point in time, it's 65% that we're going to do 50 basis points. So if we go with as expected here, let me put it on the other side. If we go with as expected here on the left, then that's essentially a neutral outcome. And what's going to matter more so than that 50 basis point cut is what the tone is of Powell. What Powell says afterwards is going to matter and have a bigger influence over overall markets than the rate decision, especially if it's super expected. Like if a lot of the times you'll see 95-5, like 95% chance of another pause, 5% chance of a rate cut. If we do that 95% expected thing, that's a neutral outcome. Attention pivots from the actual rate decision to what Powell says, the Q&A, what his stance is, all that good stuff. And that's what influences the market following it. Now, if we go the other way, where if it's widely expected that we are going to, you know, I guess an example of it is if it's widely expected that we're going to do one thing and then we shock the market and do another thing, that's where you get some big swings up and down, and it depends, right? I think if we shock the market and raise rates more than expected, that's going to get negative attention because it's going to scare people. A higher rate cut than expected is going to mean, hey, something might be breaking. That ain't good, you know. Something's breaking. If we shock the market and do something drastic, what looks to be desperate for a lot of people, that might freak people out. The market might go down, and there's a lot of nuance in between there where, you know, there's a number of those different outcomes that could influence things. So you just gotta pay attention. Balance is key. Yeah, 100%. Balance is important. Also, guys, if you haven't already, check out Top Step. Top Step, funded account program in futures. They give you a demo, test your skill with it first. If you pass the test, they fund you. If you don't, you only lose what you pay for it. In this case, it's $49 for the base one. Again, Top Step X, the single biggest edge in trading right now. I can day trade this just like I day trade stocks. There's no PDT rule in futures. I can buy market, sell market, very similar to day trading stocks. I can day trade the S&P, the NASDAQ, gold, some currencies. And so regardless of whether you're coming from Forex, futures, stocks, you can day trade in similar ways. You can't day trade individual stocks, but I can day trade essentially the SPY price action, Q price action, Dow price action, Russell price action. No PDT rule. Patterns are very similar to blue chips. And again, if you want to use a funded account program, Top Step X is one of the biggest edges in funding, in my opinion. The base one's $49. Some of the best rules in the game in funding, and Top Step X literally has 0 commissions and only 74 cents per trade in fees if you're trading micro contracts. So I can trade very small size. And again, leading up to today, and if I pass this test, I got to make 3K without losing 2K. They fund me a 50K account, and that's what I have right here is a 50K funded account. And I'm up hundreds on it already. And so I'm building up profits so I can withdraw. And if you're good enough as a trader, you can build up profits, withdraw, and fund your own account. There's no PDT rule in futures. And again, it's just the biggest edge in funding right now. They have some of the best rules in the game in futures funding. And 0 commission on Top Step X. And so understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. I have no idea what I'm talking about. I might be wildly wrong about anything and everything I say. Confirm everything with them. Not an investment professional. They pay me money. I'm biased because of it. And yeah, definitely top 3 right and wrong traders in the world right now. Check it out. Here's the link. People are complaining about home prices. They're not worried so much of the rates, but they think it's the rates. Yeah, I mean, look, cutting rates might make house prices go up. It's what they don't understand. Like, people act like, look, and again, this is all from political bias most of the time, right? Where people are super biased politically. And so they're like, things are bad right now because it's an election year, right? So it's the end of the world scenario. Everybody's mad. It's the end of the world. The problem is that people are unhappy because of inflation. And cutting rates is going to do what? Is it going to make inflation better? Of course not. It's the opposite effect. It's going to make things worse. It might make housing prices go up, you know? And then people are really going to be unhappy, and they're going to be sitting here like, what are we doing? It's like, what are we doing? Y'all are the one pushing for rate cuts. You know, the only people that are really going to benefit, again, you got some people that rent prices may decrease with rate cuts. That's certainly, like, we went over that reaction earlier. But the problem is that people are unhappy because of inflation, and that's the focus and priority we should be taking is inflation, you know, because inflation doesn't go down unless we hit a recession. And a lot of people are pushing like the lender's bottom line, like the banks. The banks are going to be benefiting from rate cuts. Why? Because when interest rates are low, they do a lot more business. Lenders do more business. Mortgage brokers do a lot more business. And so it's nuanced, but it's certainly a risky thing to cut rates really aggressively right now. You know, but it's an election year, and the Federal Reserve gets more pressure to cut rates during an election year. They want everything. They want the economy to look great, and so they want to cut rates. But You know, a lot of people that are involved in inflation problems or that have gotten hurt by inflation problems, pushing for rate cuts like that's going to solve the problem shows us genuine lack of understanding about economics. Because one of the more obvious consequences of cutting rates is inflation. All right. All right, so we got the Empire State data. All right, so what is the market reaction? Well, the market cracked lows a little bit here so far. We've been mostly downtrending all morning now. Here's the entire pre-market session on the NASDAQ 100, and we've mostly just been dipping all morning. What's up, Cheddar? But if they lower rates, won't that make things like gas prices and such go skyrocket? It could. Gas prices mostly are affected by, like, they're affected by rates. But they're also affected by, like, stuff going on overseas. And there's a lot of stuff with gas. Hey, later, Dean. Have a good day. Well, you have to pass the test, V. So you got to actually pass the test, right? So they give you a demo of 50K, and most people are going to fail, right? Because most day traders lose. The point is, though, like, they give you a demo. It's $49 a month for the base one. They give you a 50K demo. You got to make 3K in profit on it without losing 2K first. And following their rules, there's 5 contracts max. A reasonable 2 to 3 ratio, though. You know, and there's some other rules, but if you do that successfully, that's when they fund you 50K with a 90% split. There's rules once you're funded as well. But again, if you lose these challenges and you lose the $49, you could always reset it again for $49, right? But if you lose there, you probably would have lost more putting the money up yourself anyway. And so this is a great middle ground of pressure where you have some risk. It's not the full risk of thousands like you would putting the money up yourself, but it's something. And it limits your risk, allows you to experience like the pressure of trading and risking something without taking the massive risk like most new day traders do, where they put up 5K and they lose their entire $5,000, right? That's very common. It's much better, I think, in that regard to just trade one of these funded account programs. I think most people are still going to lose, but this is a lot cheaper, you know. And again, if you want to check out Top Step, again, one of the most, they've been around for over 10 years. They've paid out over $40 million, you know. But again, most day traders lose, right? Same as here. Most day traders are going to lose. I'm always honest about it. Agree, but I don't get why it says a month. Well, because it's a monthly subscription of $49, you know. The reality is, though, if you're good enough, you should be able to get funded within a month. So it should only be, you know. But again, everybody's different. Some people will take longer, but for me, it never did. Like, I got funded in this account in about a week, I would say, maybe less than that. And again, it was really nice. I actually did it on stream because I built up the profit. I use regular, you got to take risks, right? And a lot of people are going to lose, and it might take multiple resets to get funded in any account. But it was really nice because I remember I built up like $2,500 in profit. So I was only $500 away from what I needed to hit to make that 3K. And then once I got really close, like within a couple $100 to the target, I could scale down my size and trade micro contracts. So that way I could sit on I could keep most of my profit without risk giving it back. Like if you try to trade the regular NASDAQ 100, you could be down thousands in a couple minutes, and that's why like there's 5 contracts max. That's freaking plenty. If you buy 5 contracts of the regular NASDAQ during the market open, you could be down 10K super quick, right? And so nobody needs to trade 5 contracts or more unless they're trading micros, anyway. And again, micro contracts, 5 contracts of micros is a lot too. And so it's the perfect middle ground. And again, I think the rules are really favorable personally. But again, I'm biased because they're an affiliate of mine. They pay me money, I just genuinely think it's useful. All right, so we got the Empire State Manufacturing numbers here. It didn't really move much, to be honest. Alright guys, so alright. Alright guys, so Palantir, yeah, Palantir had some big movements. Palantir pushing towards 40, so it's something I'm watching for sure. But yeah, I'm gonna buy this dip. We're dropped enough, so this is me trading futures. We've dropped enough. I could probably start to buy in, but I'm going to start my day off small. It's my first trade of the week. Why is a 50 basis point cut more likely? I think somebody said a leak about 50 basis point happened, but who knows, man. Alright, so we're up about $6, $5 here, $10. We got a little bit of cushion here. We can let it work. And again, this is day trading micro contracts, a very small position. But again, the commission is so small that we can do this. Small range. Nvidia's starting to bounce back a little bit too. You can see my profit right here on the we're up like a small amount. Only 2 contracts. It's early in pre-market, so that's okay. Add more to it and take a larger trade, which I'm considering. I don't know yet. All right, so we're up a little bit. So now we're down some. Again, we're basically completely flat, and now we're back up some. I was thinking about adding on this dip, see if we just continue and climb a little bit higher is the goal. You know, a very rare longer term trade for me. Depends on what Nvidia does. Market's following Nvidia. You can see Nvidia on the top right. There we go, popping up a little bit more. I'm gonna add one more position to it. So we got 3 contracts now. And we got this little preset option for 3. So if we need to get out quickly, we can. So we just took a piece off of there, locked in a 1 contract, little gain, first profit of the day. We got 2 contracts now. I want to see if it pushes up more, but this will also limit my risk selling one here and trying to give it time. So we're back up. Took a little piece off there. Nice. We're just gonna go ahead and cut out there. So we made about 20 bucks just now. Slightly less than that, but about 20 bucks. How do I export these? All right, so now we're pulling back. So we got a little day trade in there, and this is the point: is that I can kind of use very small size and get some good little trades done there. Yeah, so I'm looking at a lot of stuff. So Checking on a lot of different stuff here. Sorry guys, I'll update you guys in a second. Alright, so we did get this big old rebound all the way back up. I'm watching that video pretty close. All right, so yeah, we're gonna day trade this big FOMC meek. A lot of the rates came down a lot, or the expected rate cut went up a lot to 50 basis points. So 50 basis point cut increased a lot. Yeah, I'm checking on see, people are strange, dude. Yeah, I'm looking at like so consumer sentiment data on Friday. All right, so we dipped all the way back down again. I'm going to buy this dip again. So we're going to buy it again. I'm going to add a little bit to it too, maybe get in 2 contracts. And then maybe we'll add a little bit more too. All right, there's a big pop. There we go. Took a little piece off. Cut out that. So we just made another 15 bucks, 20 bucks. So we're up about 40 or 50 today. We caught that little dip. Hey, definitely top 3 good morning ever in the world. We have a lot of news. Do you trade the Russell? No, not really. I'm using micro contracts. Is what I'm doing. So I'm using micro contracts. You know, it's very strange, right? So like, for whatever reason, somebody sent me 500 fake subscribers on Friday, right? And I could see it happen. Like, they sent me 500. Like, I'm not sure why, to be honest. And YouTube caught it and just took them away. But it's just strange. Like, it doesn't hurt the channel. Like, YouTube understands people are gonna send you weird stuff and target you. And so, you know, I know some, like I said, I had a guy that I was gonna work with for a while. And to be honest, he seems just kind of like an older dude that doesn't really understand the internet, right? So like, he started to work with me, and this was like a year ago. And what he did was, like, I'd create shorts with him and stuff, and like, he would tell me stuff like, "Hey, I left the short playing in the background," and I'm sitting there and like, immediately I like, okay, I'm not working with you, like, and I immediately just kind of say, all right, never mind, like, done, not working with you anymore. And so I don't know if people think that it's helping. It doesn't really hurt either. It's just kind of a waste of time, you know. It's just strange. And again, like, especially like now, you know, like, you can see most of the people that watch my channel are natural and organic. Like, you can kind of see it in the viewership. If you look at the analytics, right? Like, US people are real most of the time. You can see where they come from. They come from the browse page. They come from the search page. Those are legit real people. But yeah. Yeah, but it's not really going to hurt it in any significant way. I guess it got me talking about it. It's just kind of weird. I mean, I'm not telling you what you should trade, Kelly. Everybody's different. Trade whatever you want to trade, Kelly. Everybody's different. Not really any big news today. It could also be once or twice a month, YouTube will just kind of delete like the bots, which is fine. You know, I'd rather them delete it. And so that could be what it is too, that maybe they just decided to, you know. Yeah. I mean, I don't know. Unlikely. YouTube does a pretty good job of like seeing which ones are legit and which ones aren't, you know. Well, yeah, they're mostly, I've gotten rid of mine though. One of the ways I got rid of mine, so like the Telegram bots were some of the worst ones, right? And you'll see the Telegram bots where they're like, hey, you know, I've got Bill is the greatest financial analyst of all time in the world right now. They'll say, you know, Bill helped me earn $10,628.38.5 yesterday. You know, kindly find him here. Cough, cough, Telegram is what they'll say. But they've kind of gone away, which is good. But those guys were really bad for a while. YouTube did something to get rid of them, which is nice. Like, so YouTube finally got rid of them. But they were out there. They were causing problems for a while. Yeah, well, they think if they're specific, people more likely to believe them. When really again, they're just super obvious. I just delete them. Anytime I see them, I delete them. And I did get a recent influx of them. But it's just part of running a YouTube channel, you know. What I mean is, like, YouTube does a good job of, like, the viewership that YouTube shows is usually very real, you know. Oh, is it a rollover week? Yeah, I did watch I told people, bro, I have some friends in jiu-jitsu. Yeah, basically Faye. I have some friends in jiu-jitsu, and I asked them before this fight. I said, "Hey, who do you think's gonna win, Sean O'Malley or Merab?" And they kept saying O'Malley. They're like, "Bro, O'Malley's gonna win. O'Malley's gonna win." And I kept telling them, I was like, "Look, Merab's gonna throw him around." Right, Merab. If anybody watches Merab, you know Merab is gonna be throwing Sean O'Malley around. I'm honestly disappointed I didn't make some money on it because I knew this ahead of time. I told all my friends, I told everybody, "Yo, Merab's gonna beat up O'Malley," and O'Malley was the favorite too. And so, you know, everybody wants to believe Sean O'Malley out of confirmation bias, like they want Sean to win. But I don't let that overpower logic. And I told him, I said, Merab's gonna throw him around. Merab's gonna wrestle him for 5 rounds. And that's exactly what happened. Merab, and then again, Valentina, she's good too, but I thought the main and the co-main were boring. Just not. And I'm a jiu-jitsu guy, so I love grappling as a martial art. I train, you know. Spazzy is two stripe white belt around, but I still thought they were boring. All right, guys. So yeah, I didn't see that one, Chuck. Yeah, so is it quad witching coming up? Is it really? I think it's coming up like next week. When's the next quad witching? Or it might be this. It might be Friday. Is it Friday? September 20th, it is Friday. So Friday quad witching day this week. It's a crazy week for it too. It's the FOMC meeting week. Crazy week, to be honest. All right, guys. $15 minutes. We got the import state manufacturing. Tomorrow's retail sales data. That's a pretty big day. You know, one of the best reasons to use AI is because I've had people send me some weird contracts, right? One of the best reasons to use AI, you can send the contract to AI and say, "Hey, AI, is there anything I should be concerned about in said contract?" Right? And AI will give you bullet points. This, you might want to worry about this. You might want to worry about this. All right, I'm going to buy this dip again. 2 contracts here. We might get into 3. There's 2. We're buying at the bottom of the range on FOMC week ahead of retail sales, and so we got a little cushion. We're going to try to build up that cushion. We got 4 contracts now. It's a big position. It's not small. We got a good little cushion already in here, so. Now we're kind of flat on the day, probably. All right, now we're right back up. We're almost green. All right, keep it up. All right, we just took some more off here. Locked in more. All right, so we just made another $30 just now. What am I up on the day? So that dip buy worked here. Let's see if we can. What am I up? I'm up 50 bucks on the day. Hundreds in this account. We're doing really well so far trading this account. Slow and steady gains is what we're using. Slow and steady gains. All right, let's see if we continue it. Yeah, so remember, it's not really quad witching. Quad witching stands for all 4 major contract types expiring. There is no longer 4 major contract types. Instead, there's only 3. There's no such thing as single stock futures contracts. They don't exist anymore. They're no longer around. I wish they still had single stock futures. I'd just day trade futures. But I remember seeing single stock futures. But unfortunately, they're no longer around anymore. So, will be fun to see what happens today. All right, we've been mostly chopping sideways, and that's what I'm targeting this month is choppiness today, guys. Again, it's the FOMC meeting. A lot of the time ahead of these big FOMC reports, we got choppy, neutral price action and activity. So we'll see what we get. Yeah, I'm looking at some other stuff here, waiting. Cool camo. It's a Houston hat. I'm really an LSU person. Like, I'm a big LSU fan. And LSU won. Nussmeier, I don't know. He doesn't have the legs for me to be happy with him as a QB. He's a lot like Drew Brees, I guess, where he can't really scramble the best. He's a little immobile, but he's super accurate. He doesn't perform as well under pressure. But we won against an unranked team Saturday. Again, the Saints are looking great. The Saints are doing really well this year. The Saints look good. Saints are 2-0 this year so far. Beat the Cowboys yesterday. Hey, bro. How you doing? Had to say goodbye to my kids, my children. All right. So again, we did get this big rebound, and again, I'll say it once, I'll say it again. I haven't had a losing trade today so far. The reason I haven't had a losing trade is because we've got this big downward action, and then we start to chop, and so the likelihood that we're going to go down again is lower, in my opinion. I'm not going to say it's even low; it's lower. So when we start to chop, I'm gonna say, okay, we're at the bottom of the range. When we start to hit these levels, I'm gonna buy that bottom of the range up. Look to see if we get a little pop. That's the trading strategy I'm using. We're ahead of FOMC. This week we got retail sales data. We've got FOMC meeting. We got durable good orders. We got jobless claims. We got all this stuff coming out this week. And so leading into these big reports, I'm assuming we're going to get choppiness, especially ahead of Wednesday. Wednesday morning, I'm assuming we're going to get deep chop, and that's when I'm going to go bigger on trading that chop. You know, that's my logic today. What do you guys think? What do you guys think we're going to get this week? Do you guys think we're going to get big volatility ahead of these reports, which is kind of the opposite of what I think? Or do you guys think well, you don't buy a 50K. I mean, you could buy a 50K account. Remember, it's a demo account until you pass the test V. You could buy that today and then immediately cancel it. And if you pass it, great. And if you don't, you know, yeah, you should be able to do that. But check with them. But I'm pretty sure. So yeah, my dad was in town and my little dog Rue. Yeah, we got Rue whenever my wife got pregnant with my son Jack, and my wife has asthma, so she couldn't keep Rue while she was pregnant because she can't take her Advair, which is like a asthma medicine that you're supposed to take daily, like a once daily asthma inhaler. And so we had Rue. We adopted Rue from the pound. And we got him, and he was a little puppy at the time, and then we found out my wife was pregnant with like a couple months later. But I had already trained Rue. Rue was a really good dog. I had trained him. He knew how to. He was potty trained. He knew how to sit, speak, like all that good stuff. But we couldn't keep him because Carol couldn't take her asthma medicine, and she's allergic to dogs, and so we ended up giving him to my dad, and my dad ended up like adopting him, and he turned into my dad's like best friend, you know. Unfortunately, he's really not doing that well. He's been struggling a lot. He had like a little mini seizure Saturday morning, and so we had to bring him to the vet and sit there all day. It's just been tough, man. Good dog. He's a little terrier. He's sweet. He's a cool dog. But yeah. All right, guys, we got 8 minutes. 8 minutes. There's Apple. Apple is breaking down on bad news this morning, guys. Apple is flushing down a little bit here. All right, chat. Let's see. All right, chat, so stick around here. I see some Louisianians watch my videos. So, how about those Saints, guys? I can't lie, I was skeptical of Derek. All right, we're back down to the bottom range again here. I don't know whether I want to buy it up. The problem is we got 6 minutes left until the market opens. And so I think that's a risky thing. Chiefs. Yeah. All right, guys. So again, we got 5 minutes. You get 100% of the first 10K, I think, on Top Step. And again, the benefits. The benefits are like, look, it's a lot easier to stay funded on Top Step. It really is, right? There's a lot of benefits of it, but it's a lot easier to stay funded on Top Step. Obviously, the no commission thing is the powerful thing. I'm gonna buy this. I'm tempted to buy it. We haven't had a losing trade so far, and I don't want to jinx it. But I also think like this big down wick. You know, we're right at the lows of the day. You know, we're on a big FOMC week. There we go. All right, so we're gonna immediately cut it. Made another $20 there. Just kind of grinding up profits today, man. And again, this is the big edge, is I can take these little micro contracts and just take these little small trades. We're almost up $100 on the day. And look at my trades so far. This is the edge of Top Step X, right? This really is. Like, look at the edge. No losing trades today. Literally 0 losing trades today. Not 1 losing trades today. So, and they're small trades, $6, $3, $8, $6, $7, $5, $4, $7, $7, $10, $5. So small little 74 cents on Top Step X in fees is the edge. It's the biggest edge in trading. And again, these, like I said before, in my opinion, it's a lot easier, chat. It's a lot easier to predict this or this or this at the bottom of the range, or this at the bottom of the range, or this at the bottom of the range, than to predict some type of big breakout. The big problem most day traders face is that they're trying to predict breakouts. You know, like if I get to the top of the range and something's choppy like this, right, and I finally get up to the top of that range and I'm right here, what do you think is the more probable outcome, guys? And this is the biggest flaw in most traders' thinking. What's the most probable outcome right here at the circle? You know, a lot of traders treat this like it's the more probable outcome. They treat this. They think this is the more probable outcome. You know, and I'm here to tell you that, not in my experience, maybe I'm wrong, but in my opinion, if we go like this, even if we break that high, the more probable outcome is what? It's this. You know, like ranges are the most powerful edge you get, and extension's a factor. So if we drop massively and then consolidate, betting that we're going to drop again is a low odds thing, in my opinion. It's not a super probable thing. It's much more probable that we're going to range back up. And if you can isolate parts of the day and parts of the week and parts of the month where we have a higher probability of said choppiness, that's when the edge picks up. You know, so hope that all makes sense. But again, a lot of traders chase breakouts. Like, and again, part of it's marketing. Like marketing's like, oh, jumping out of bed. It's time. It's the move, guys. Let's jump out of bed and freaking, you know, ride breakouts. But again, that's not the way, in my opinion. Like, that's, you know, it might be more exciting, might be more gambly, and a lot of people are justifying gambling, but it's not the big edge way to do it. That's right, Leland. Yes, sir. All right, guys. Here's the opening bell. 1.5 minutes. Does jiu-jitsu help with analyzing the finance markets? No. If Jerome Powell steps outside tomorrow and stumps his big toe on his right foot, will he raise interest rates? All right, guys. NVIDIA down to 116s, broke lows. Let's see what we get. We got 1 minute. But no, I love jiu-jitsu. Jiu-jitsu is a chess game. It really is. It's a grappling chess game. It really is. You'll notice, like, if you go to the jiu-jitsu gym, one of the best guys is a doctor, right? And he is not, like, he does it. He's not big and strong. He's not like some type of bodybuilder looking guy. He's like a skinny doctor, right? And he's only been training for about a year, you know, in my class. But he got his blue belt earlier than almost anybody. He got his blue belt in like a year, which is very rare, like 11 months. And the reason he does it is because I think it has to do with intelligence. Jiu-jitsu has to do with smarts, right? Like the smarter you are, the better you get, the faster you get. And he makes better decisions when he's rolling with people. And I think that's a key factor that a lot of people don't recognize. Anyways, we're bouncing back up. Market opens up in 20 seconds. Yeah, he's relentless with his takedowns, bro. His single and double legs. I have a really good sprawl. I do. My sprawl is legit. Like, it's hard to take me down. It really is. This dude is one of the people that can. This is one of the guys that can effectively take me down, you know. But, yeah, he's just good. Relentless takedowns. Anyways, there's the market open. NVIDIA breaking down might cause dumps in the NASDAQ here. So here's NVIDIA flushing, breaking lows. Here's dumps in the NASDAQ, like I said. So, watch NVIDIA. NVIDIA leads the market. NVIDIA just dropped to 116. NASDAQ just broke lows of the day here. I'm going to let the opening bell. We get volatility at the open. I'm going to let it settle down before I start taking trades. Yeah, that's probably it. I mean, him and I are competitive. Really, I tapped him out on Friday. He didn't tap me out. And so, like, him and I are pretty competitive with each other. He's really good at takedowns. I'm really good at stuffing takedowns. I have better control. I have better finishing ability than he does for sure. Like I have more offense, but his takedowns and pressure are really good, really good. So a lot of the times nobody will get tapped out and he'll kind of like hold me down and I'm unable to get back up, and so he'll win just in terms of positionals. But then I'll catch him every now and then. Like I caught him in a guillotine on Friday. He's good. He's good. He's a good dude. Anyways, market's down a lot. NVIDIA is starting to rebound all the way back up. Again, it's an FOMC week. I'm guessing we're going to get choppiness, but who knows? I'm going to short this. Probably a little too early for me to trade. All right, so we're out. We got out. I don't know. Somehow we made a little bit of money, but it's too early. It's only a minute and a half into the day. I don't know if I want to just give it all back like that. And again, while we're waiting for the openness to settle down, we haven't had any losses, and we can take these small little gains on Top Step X because there's only 74 cents in fees per trade with micro contracts. The biggest edge in funding. Again, they give you a demo, test your skill with it. If you pass the test, the base one, you got to make 3K without losing 2K on a 50K demo. It's $49 a month. If you lose, it's only out $40 or $49. It's not the end of the world. You can always reset it, but if you pass it, 50K in funding, 90% split, you get to keep your first 10K in profit. And on Top Step X, no commissions, tiny amount of fees and micro contracts. You can get into these small trades and really let your edge play out. That's the big value I find it. And in the futures market, there's no PDT rule. I can day trade the S&P, the NASDAQ, gold, some currencies. It's just what most day traders should be doing. And this just limits your risk. Most people are going to lose day trading regardless of where they go. It's a lot cheaper to lose here than it is to put up $5,000 and lose that. You can check them out. They're an affiliate of mine. They pay me money. I'm biased. You want to confirm all this stuff with them. I'm not an investment professional. I'm not liable if you lose. I do trade off stream. You're not going to see all my trades. I'm not even claiming to be a good trader. One of the top 3 worst traders of all time ever in the world. But with that said, look at this big breakdown we've gotten. Is the market accumulating the potential outcome for 50 basis points? Is the market baking in a 50 basis point rate cut right now, I guess is the real question. I think it's possible. I think the market might fear rate cuts. All right, so we got another position here. We're in one contract. A lot of downward pressure here, though, so we're going to keep it with just one contract here. Oof. First losing trade. We're down $25. We're still green on the day. But my hands are off right now. I don't want to short. We're too down. I don't want to long. It's too much pressure. But man, look at this downward pressure. Again, I'm guessing the market's baking in 50 basis points. It's the only thing that makes sense, is the market baking in 50 basis points. All right, so we're going to start to scale up. There we go. All right, so we just scalped our $25 right back. We made exactly $26. So we're actually net green over the last 2 trades, but that's all right. Back to where we were. We've dropped a lot, and I think now it's more probable that we're going to bounce back at least a little bit. But man, again, I think this is the market baking in 50. Tyson or Paul, if they really fight, if they truly do fight, Jake Paul's going to beat up Mike Tyson. You know, people need to research what confirmation bias is. Okay? People who think that Tyson is genuinely going to win. The only way I think Tyson could win is if they allowed PED use or TRT. Right? That's the only way I think that Tyson would win. The problem is he's 60 years old, man. Obviously at his prime, he would mop the floor with Jake Paul. But he's 60 years old. And I think a lot of old people want to believe they still got it. Old people still got it. But the problem is you lose your chin, you lose power, you lose speed, you lose cardio. The older you get, the more you lose those things. And Jake Paul's in his prime. He's young, you know, and he knows how to box. I'm not saying he's anywhere near as good as Tyson. But if they genuinely box, it's not even going to be close. Right? And again, people desperately want Tyson to win, and so they overestimate his likelihood of doing it. Yeah, you might be right. If it's only, it might not be economic stuff. It's just tech. All right, so we're going to buy this dip. We're way down here. I made another little $15, so we're green. We're up about $100 on the day now. Watching video close. Video is what you want to watch. A little bit here, chat. Nvidia bounces up some. I'm gonna let things cool off some. All right, so this big rebound happened, which is why I like buying stuff into it. Tesla, guys. Tesla's already up, just a context of it. Tesla's already up a ton. Tesla's already up a big amount. Yeah, like, trust me, I really want to believe that Tyson will win. It's just so unlikely, man. Yeah, I mean, plus code, I think you want to believe that Tyson would. You're looking at Tyson in his prime. Like, here's the problem, all right? The problem is Tyson's putting out these little 30-second clips of him giving everything into it. You know, he's boxing, he's doing all this stuff. It's 30 seconds. You better believe after that flurry, Tyson's sitting his butt down and breathing hard. You know? And so he's probably tired. You know why it's only 30 seconds? Is because he's not going to last long at all. His power is going to go. Like, you know, it's very easy to look good for 30 seconds, right? But Jake knows how to block. Like, Jake's a decent boxer. He's not great, but he's decent enough to beat a 60-year-old, like, you know, boxer. And again, people desperately want to believe Tyson wins. They hate Jake Paul, and a lot of it's marketing, right? Like, yeah, I call it the Conor McGregor effect, where, and Jake certainly copies off of him, where Conor, you know, you got some people that hate him, and they pay to watch him lose, and then you got some people who love him, and they pay to watch him win. But they're both paying, you know? And again, that's exactly what Conor wants. Conor doesn't feel even half the way he makes it out to be publicly. Conor's just ruffling feathers. Same thing with Jake Paul, right? If you genuinely hate Jake Paul, you're doing exactly what he wants. Exactly what he wants. He wants you to hate him, so you buy it to see him get KO'd. And again, he's selective in picking his fighters that he knows he's going to beat, right? Like, yeah, it's Mike Tyson, but it's 60-year-old Mike Tyson. You know? There's a difference. And if it was in their prime, obviously Tyson would mop the floor with him, but it's not. And instead, it's 60-year-old Mike Tyson. And again, confirmation bias is a powerful thing. You know, if you fall into that trap of hating Jake Paul and loving Mike Tyson to where, like, you're so desperate for Tyson to win, you'll ignore logic. That's exactly what they want. You know, that's exactly what they want. And so you got to understand, a lot of Jake Paul is just marketing, right? He wants you to hate him. And so, should you really hate him? No, you should understand it's just marketing, you know. Yeah, 100%. I'm worried about Tyson if he fights Jake Paul. He's way too old for it. All right, so now we've broken down a lot this morning at the open, and now we're just sitting. Yeah, they'll both be all right. Is this a rerun? Of course it's not. Again, my stance has stayed the same. If you're mad at me for repeating my stance, you'll be all right. But my stance has stayed the same. You know, again, the problem is people get mad at the messenger. Like, if you want to believe Jake Paul's going to lose, somebody coming along like me hitting you with logic might make you upset. You might get weird. You might not like it here. You might lash out emotionally at it, and that's okay. I mean, when you look this good, people are going to hate on you, you know. You know, I think, like, when you're this correct about everything you ever say, you know, humility just comes to you. Like, when you're the best trader of all time ever in the world, definitely top 3 for sure, people are going to hate on you. And listen, I just get it, man. You know, humility allows that to happen, you know. And, I hope I'm wrong. I really do. I hope Tyson KOs him in 10 seconds. I genuinely do. I told somebody this about the Sean O'Malley fight and Marab fight. You know, I was like, hey, watch, Marab's going to ragdoll O'Malley, you know. And they said, oh, you're going to see. And I said, I hope I'm wrong. I hope O'Malley knocks him out and I'm wrong. I really genuinely do. It's just not going to happen, you know. And again, Marab and O'Malley fought and it didn't happen. Sir, is it time for investors not to invest, or should I wait a few more days? Investing, it doesn't matter either way, I guess. Like, I don't know. Investing, I'm not going to tell you what to do. I have no idea what you should do. What I will tell you is that 2 days from now, we have a massively volatile event in markets and finance. And so on Wednesday, it's one of the biggest events in finance in the last few years. It's going to be incredibly important to watch and pay attention to. It's something that you certainly want to be weary of. But if you're holding things long term and genuinely investing, meaning you're holding things for 5 to 10 years, it won't matter as much. But it'll still, I mean, you know, personally, I'm waiting before I buy up a lot of stocks or anything like that. In my opinion, I'm waiting. But who knows what's going to happen? What do you guys think? All right, guys. Oracle going crazy. Didn't Oracle have earnings recently that it did badly in? Oracle rip it up big. So Oracle did great during their earnings. Basically, look at Oracle, and this is like people say technicals don't work, right? The problem is like this though. So like here's Nvidia. All right, if we put up Oracle, like this is why technicals work at least to a certain extent, is because Oracle gaps up super heavy, fills the entire gap, goes right down to what? The previous close right here, guys. Here's the previous closing price. Here's the high of the last few days. Right? And Oracle fills the entire gap, comes all the way back down, bounces off of that exact level, comes right back up to where it was. And now the question is, does this level hold as resistance? It's possible, but that's why technicals work at least a little bit. At least a little bit. Super Micro can make a comeback. It could. I don't know if it will, but it could. Maybe. Super Micro down to 438. It's been kind of sideways. I mean, Super Micro has a very small float relative to a lot of other microchip stocks, meaning it can make big percentage moves up or down. And so it could have a big comeback. It could also have a big failure. So you just got to be careful and understand it's a low float stock that might move in a very volatile way. Just be careful. All right, NVIDIA battling that volume-weighted average price. And again, this is why I tell people, here's NVIDIA, and then here's the NASDAQ 100 futures contract. Notice anything, guys? It looks exactly the freaking same. You know, which is why, people ask, I like to watch NVIDIA when I trade, especially the NASDAQ, at least right now, because sometimes there'll be a little bit of a lag, meaning sometimes NVIDIA will shoot up, and it'll take the NASDAQ a little while, and then it'll follow it up in sympathy, but there's a lag that allows me to get in and ride it up. It's not always the case, and sometimes it happens simultaneously, you know, but other times there is a little bit of a lag, and you can profit from it. I am on Top Step, trading on Top Step X because it has no commissions, 50K funded account. Hey, thank you, man. You're a nice person. Love from India. Hey, thanks so much. I appreciate it. Welcome. Well, I have nothing on margin right now. For sure, plus, it could certainly happen, man. Wednesday, a big event in markets. If the market doesn't like the outcome or the tone of Powell, market could certainly dump. It might also rip up. We never really know, but it's a volatile event in markets. We're going to stream it all completely live on stream as we always do, so stick around, guys. We're going to cover it live like we do. Just be careful. Well, I think the market follows NVIDIA a lot, but, you know, anything could happen, chat. I don't know if he's going to fluff. I think it depends on what he says. I think if he do 50, he might fluff. Because it's such a risky, desperate sign that he might fluff it afterwards. All right, I'm going to start shorting. All right, we got 2 contracts now. We took a little bit off here, but I'm going to add right back. There we go. Took it off. We got a little bit of a cushion now. So we added some more. A little bit of bad fill on the rest, but I'm kind of just trying to manage it after profiting some from it. We got some room now. There we go. All right, nice. Yeah, we're up. I would say. Let me see. Yeah, we're up almost exactly $100 right now. Small steady gains wins the race. So we're up almost exactly 100. Another green day, man. We've had multiple green days in a row. Check it out. So it's small, but over the last today, I'm averaging 90% win rate. 90%. Profit factor 4.5 to 1. Again, my risk reward is not good. We got a 2 to 1 risk reward level, so it's not necessarily good. But my profit factor is 2 to 1. We've only lost $27. We made 124. 90% accuracy. You know, 1 to 2 reward to risk ratio, so not good at all, but good enough with a high accuracy scalping system. So that is my stats today so far. We'll see if we can keep it up. Yeah, so the reason Apple is down is because Apple pre-orders came in pretty low relative to last time, and as well as low relative to expectations as well. I think the market could be pricing in 50, but I also think the market's going to be choppy, and so far that's what we've gotten since the opening bell. I think we've gotten big downward range, big upward range, and I think like we could get stuff like that. I don't know. I'm just guessing. But it's FOMC week, and it's a big one, right? So this one is the one where we're almost certainly going to cut, and that's going to be a big event for markets. And so leading up to that, we might have apprehension. Is my guess. That's why I bet profit, or that's why I bet choppiness, because I think leading up to that, we're going to have choppy neutral activity. Yeah, I mean, Justin, like Justin says, it takes me 1% to make 100. You, it takes 0.03% to make 100. Right. But again, I mean, I think Justin, like, it's really easy to make that sound like it's a good thing. You know what I mean? Like, it's really easy to make that sound like a good thing. The difference, though, is that it's risk management, bro. Like, listen, it also takes it to lose 100. It's going to be a much bigger factor. But I guess the overarching point I'm trying to make is you're going to lose money much easier as well, right? And so the reason I like this, small, steady gains, we could try to critique 90% accuracy and small and steady gains, but again, and I've had people do this for years and years and years, and it's all love. We can agree to disagree on it, all right? But I've had people do this for years where they see me make a couple $100 a day, $100 or $200, you know, and they criticize that because a lot of the time they've been sold on some get-rich-quick scenario where they think that they're going to be able to make 1% a day. A lot of them truly think that they're going to be able to make 1% a day, and maybe they can some days, but it's not sustainable. And so 1% a day looks something like you have to take big risks to try to make 1% a day. You make 1%, you make 1%, you make 1%, your whole account goes away, right? Because in order to make 1% a day, you got to take on consecutively higher and higher risk, you know? So like you're not going to be able to feasibly do it. It's kind of like blackjack, where in blackjack, if you count cards in blackjack, you need to have a big account. You need to have a big, like 100, 500, 1,000 buy-ins to be able to accurately and safely do it, get past the variance. And so Like, yeah, you can make money with bigger size. You can also lose money with bigger size. And the longer you do that, the more likely it is that you're going to lose money and make a mistake and get emotional one day and take your whole account out. Where for me, I can trade small and let slow and steady gains chop it up. The other nuance of this that I'm not really including here is that I got funded in this account a week ago. I'm trying to build up a base of $500 to $1,000 in cushion in this funded account first before I start building up more profit. Right, before I start building up more and more profit and taking larger and larger size, I have to trade small first because again, I don't feel like working to get funded again. You know what I mean? I just don't. I don't feel like doing all that. I would much rather trade small, build up a genuine cushion in my account, and then once I have that cushion, increase size. That's the appropriate way to do it. But again, a lot of the day trading community has been sold on this get rich quick scheme, mostly by people trying to sell them courses, right? People trying to sell you courses. If they say, hey, it's super difficult and you're probably going to lose money, you're not going to buy their course. So what do they say? They say, oh, guys, you can make 1% a day. Like, listen, you got a system that you can make 360, or I would even say you got a system where you can more than double your account every year. Goldman Sachs will pay you $1 billion for it. You know, if you do, contact them. You know why you don't see a lot of billionaire YouTubers? Because they're full of crap. You know, yeah, 1% is not sustainable. Like, look, say you got 10K. Say you make 1% a day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. Yeah, you're going to make, with 1% a day in compounding in about 60 trading days, like you're going to make 65% in 60 trading days, right? You're going to make hundreds of percent on the year. And again, like, this is not sustainable. You're never going to be able to do this, you know, like you're just never going to be able to do it. Like, listen, the easiest way to put it is like this. Okay. You got a lot of these people selling you courses, acting like they're day trading gurus, acting like they're experts, acting like they're the greatest. Okay. The problem is that they might show you their broker statements like once every 6 months. You know, but if they're selling you a course, what better credibility boosting thing would there be than showing you their broker statements every single month? Showing you these crazy 150% on the year, 200% on the year, 300% on the year profits. What better credibility boosting thing would there be to selling you a course than doing that every single month, right? Instead of seeing it every month from these guys, you see it once every 6 months, once every year. What does that mean? That means that those are probably the months that they're actually profitable. The rest of the time, they're probably losing money, you know? And again, they do that to build credibility. Like, oh, I show my broker statements. Yeah, once every year, you know? And so again, like, it's nonsense. They're just trying to sell you stuff, right? And again, coming from somebody that, like, I make money from sponsors. I make money as an affiliate. I'm doing this to make money, you know? But I can be honest about it because I don't sell a course. I don't claim to be good. I don't claim to be any of that stuff because I don't need to. I don't want to. I'd rather just live my life and be honest with people. And so that's the real problem with it, is that the people selling you on this like 1, 2, 3%, 5%. There was a girl on TikTok that said, if you just make 5% a day, you're going to have X amount of money at the end of the year. And it's like, it comes from somebody that doesn't understand finance, that doesn't really understand statistics, and certainly doesn't understand how easy or hard it is to make 5% a day. You know how much risk you got to take to make 5% every freaking day? It's so high. It'll look like something like this, where you're going to make money, whole account's gone. That's what making 5% a day would look like. You know, and that's what a lot of them don't understand. So a lot of these guys, when they're in this phase right here, right before they really give up everything, a lot of the time they're adding to losses and adding to losses and adding to losses. When they're in this part of it, they think they've got the best system in the world. They're like, oh, look at me. I'm going to be a rich. I got the best system in the world. Look how great I am, guys. I'm making 5% a day. The check hasn't come yet. You know, and again, I go over this at least once a week, once a month, I would say, because it's important for people to really understand what they're hearing. You're not going to make 5% a day. You're just not every day, not consistently. And if you could, again, Goldman Sachs would buy it from that system from you for $1 billion. It's just not happening. Anyways, guys, I'm out of here. Hey, I love you all. Again, if you want to check out Top Step with me and limit your risk when you're learning how to day trade, it limits your risk. You're not taking on as much risk as you could. Most day traders lose. If you put up $5,000 in your own account in stocks or whatever, and you try to day trade, you're almost certainly going to lose that $5K if you're brand new. Almost all day traders do. I did. Anybody telling the truth, that's the truth. Limit your risk. Try a funded account program. That's what I would do if I could start over personally. But again, I'm biased too because they're an affiliate of mine. So what do I know? Hey, I love you all. You'll have a great day. If you want to check them out, link is in the description. If you want to check out Top Step, which again, in my opinion, is the best edge in funding right now. I'll see you guys later. Y'all be good. Have a great day. Tomorrow, retail sales data coming out, guys. Tomorrow, retail sales. We'll see what that looks like. Y'all be safe.